Hello viewers, welcome back to our YouTube channel, KC Accountants Education Center. Today we want to proceed from where we stopped last time. We had promised that we are going to be looking at the determination of market values that we are going to use in a computation of our work. So, determination of market values. Now, we want to start with our VE. VE, which is the value of the market value of equity. Market value of equity. So we want to look at equity. And when we talk about equity, we are basically referring to common stock and retained earnings. Common stock or ordinary shares, and then the retained earnings. Because the retained earnings is also included in the market price of the ordinary shares. And we know that for us to be able to get VE, we get the number of shares times the market price. This is MPS, but this MPS is supposed to be XDiv. XDiv, number of shares times the market value per share, XDiv. But you need to make sure that you find out in the balance sheet whether they have given you what we call the par value. Because if you don't have the par value, then it will be hard for you to get this number of shares. Because we know that number of shares are not always given in the question. But we know that for us to be able to get the number of shares, we know that we always, for us to be able to get that, we get the total share capital. Share capital divided by the par value. Divided by the par value. The par value of each share. So, now we are seeing that the breakdown is a little bit huge, because even though the formula for work is looking at two sources where they are looking at debt and the equity, but you need also to read the capital structure carefully, because your capital structure might have things to do with bonds, things to do with preference shares, things to do with the loan notice and others. So you will keep on opening it up to be able to know what has been given. Because remember, we said from the definition of preference shares, we know that that is debt from the legal definition. So even then the formula, because now in the formula we only look at VE, value of equity, and then the value of debt. But remember, the debt component is combined, it has very many aspects. So we also look at, we are not going to basically say VD. No, we are going to look at value of each share and also its value. So let's now look at number 2. Let's look at the value of preference. Since it is also debt. So the value of preference, let me just call it In this paper, we are going to be focusing on the things to do with the impact of taxation. So want to look at the impact of taxation in the next video. We see how does it impact the computations of WACC. So let's meet in the next video as we are talking about the impact of taxation or taxes.